Alrighty, happy Wednesday, everybody. I hope you guys all had a good day. A pretty uneventful day in the cryptocurrency markets. We're mostly seeing a small rebound in Bitcoin and a pretty decent rebound in altcoins, which has been pretty good. So because there hasn't been so much news, we're going to be mostly talking about some technicals out there, chilling for a little bit. I got another cigar to smoke with you guys. I left my box in a friend's car, so I literally only have a few cigars I can smoke with you guys today. So we're going to be going with the same exact one as yesterday, one of these little Lanceros here. And then after that, we will be going over a small amount of news. It's not really big news, but it's just kind of reiterating what we've been talking about the Fed, a new story about the Fed's Lisa Cook here, and then just looking at some of the China moves in cryptocurrency, because China really hasn't been doing much as of late, right? And hey, Randy, happy to see all of you guys in here. Let me cut this cigar and get it all lit up. I didn't get a chance to go with Loki to the store yesterday. I made the mistake of leaving my lights on last night, or a couple nights ago, Monday night, and so my car is dead until I get it charged up here, which the delivery should be coming any minute now. So once after this stream, I'm gonna go charge up my car and let it sit for a little bit while on, and then eventually me and Loki will go over to the food store here. But right now Loki is he's treatless. He is a dog without treats, which is unfortunate. I may have some tiny ones here or there, but the big stuff that he likes, he doesn't have it. I think he actually ate the rest of his lamb here the other day too, which kind of sucks. So we're going to be doing a little bit of stuff with Loki today to make him excited or just happy despite not having any treats, right? So before I light this bad boy up, Loki, come here. Yeah, come here. It's okay. Come on. Yeah. Oh yeah, shush, good boy. Mm-hmm. Yeah. Oh yeah. Why is your chest all wet? Mm-hmm. Streambeats.net. You can tell he's been sleeping before this. Streambeats.net. Ooja, 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 booja, yeah. All right, so happy to see all of you guys there. Fitz, happy to see you. Oh, Fitz, I know I didn't see you comment yesterday, but I said thank you again. I bought a cigar and I smoked it. Same one as this. The cigar I want to smoke that I bought, I'll probably do it next Wednesday, like I was saying. But I bought it. I just happened to leave my cigars last night in a friend's car because I got a ride to the cigar lounge because my car died because I left the lights on all night. But that being said, thanks again, and hopefully you're having a good day. Don't say treat when you don't got no treats. I know. Hey Mo, happy to see you in Puma. I know. He knows though. I mean, I got crumbs of stuff here. I'm in the process of doing a deep clean in my house, like wiping down the staircases, like using those Clorox, sanitizing wipes on everything, and I've like lost so many things over the past few days that I need to figure out. Like, I lost my lighters, I lost all my cutters. All I have right here is a very cheap plastic cutter, and I have like $80 cutters. Like, I have like 30 $80 cutters, and I don't know what I did with them. So it's one of those days. But at least for Bitcoin and cryptocurrency, it's a very slow day. We're basically just seeing a small rebound from yesterday, but the rebound is mostly coming from altcoins and not necessarily what we've been seeing with Bitcoin, right? Even Bitcoin dominance is going down, say, by like 1.5%, which is pretty darn good. And hey, Lisa, happy to see you as well. I'm going to light this cigar up here, then we're just going to go straight to technical analysis, look at the general stock market, go over, 2 stories, and then we can basically chill, because there's not really that much going on today. And a couple things here before we get started, or just one big thing here. I got my teleprompter set up properly so I can start making videos here to later on tonight for tomorrow for the other second channel, so keep an eye on those. I'll let you guys know when I do that. Polls start tomorrow. I have them all scheduled out in case you guys want to like answer some questions and help me kind of figure out what type of content you guys are looking for. And the last thing is I have the video uploaded for the top 5 AI stocks I'm buying for like 2026 basically. And with those in particular, they're available for the members to watch right now, and then after the members watch them, I think Friday, it goes live. So members, you get access to it before everybody else for a couple days, and I think that's the way I'm going to be doing it, and give myself a little bit of a leeway here, which would be pretty nice. So thanks again for that, guys. And hey, Salim, happy to see my man, and Prakash, maybe. There you go. I'm doing well, thank you. Let me light this up very fast so we can get started. Damn, this thing is a little tight on my wrist, isn't it? Oh, that's okay. I don't have any water. I just realized I was upstairs a few minutes ago. I had no water. Yeah, I'll be fine for this. So we're streaming until 5, so it's not crazy, right? All right, here you go.
Streambeats.net. 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 Streambeats.net.
There we go.
Streambeats.net.
Perfecto. All right. So let's move over here to some of the technicals. Make sure this is all fitting right here. On the weekly charts, not much has changed since yesterday. We're still heading towards more of a bearish tint here. This is the concern that I have. My concern is that we're going to break down below this box right here, this order block, if you will, the support level, and we're going to try to test the 20-week moving average, which can be very volatile, as you guys can see. Even if we're just testing it, it can be absolutely insane. Now, what my plan is for the next few days is to continue dollar cost averaging, like I said, but I'm going to be waiting to see if Bitcoin is going to be able to get choppy back up here, get back to normal status quo, or if we're going to be forced back down. Really, the way we go really depends on what the Fed does on Friday. And by the Fed, I mean Jerome Powell, because he's going to be going to Jackson Hole, and he's going to be either very dovish or very hawkish. And I talked about this yesterday, but I don't want to go too deep into it, but he is going to make the market move very quickly on Friday with his speech. So it's going to be very imperative that he is at least dovish or at least not hawkish, so the market can still kind of stay up there a little bit here, right? The big issue is right now the probabilities of a rate cut in September continue to go down. I didn't open this up before I went live here, but if I go over to CME Group, excuse me.
Streambeats.net.
There you go. You guys can see this a little bit. So a week ago, there was 0% chance we were not going to have a rate cut, right? A week ago, there was 0% chance. Yesterday, there was a 13% chance. And today, excuse me, and today we've gone from 13.4% to 18.1%. So the probabilities are getting larger that we don't have a rate cut. Now, it's still 82% chance we have a rate cut in September. I'm just telling you guys there's a trend happening right now, and that's why you're seeing the market kind of go a little bit more lopsided and sideways. You can see the Dow was up a little bit today, 0.04. The S&P was down 0.24, and the NASDAQ was down 0.67. Not really crazy levels, right? But on Friday, when we see what's happening with the Fed, we will either have a nasty move here that continues the move down closer to like 108,000, 109,000, or the Fed is going to save us here and make us go higher. If I was to guess right now, because of how Jerome Powell really hasn't been able to like accept the data that's in front of him, or he's more focused on inflation than he is really the job market, if you will, right now, the job environment. I'm going to say he's going to talk a little bit more hawkishly, and that'll probably move Bitcoin down a little bit. So I expect that next move down to happen over the next few days, most likely, obviously, on Friday here. I don't think it's going to be a destructive move that takes us all the way back down here to the lower parts of our trend line, way back like below 100,000. I don't think anything that's going to be happening here, at least I hope not. But I do see an opportunity for us to have one more larger dip where you're going to see a lot of people buy, and then from there you're going to see Bitcoin continue to rocket up in the long term here, because we are still going to be having that rate cut. And I think right now the Fed is on defense, because they're losing the messaging war against Donald Trump and the economist on CNBC and Bloomberg right now, because the Fed keeps on saying, well, no cuts, no cuts, no cuts. But if we start having job losses like we can technically have in July once we have the revisions, once we start having that, there's a good case for the Fed being behind the curve and them having to cut drastically. Last time they had to cut drastically was back last October, and do you guys remember the move that happened the following month, right? October, right over here. November was a skyrocketing event on top of the Trump win, right? So there was a huge move. We can have a move like that again, but I don't think we're really going to do that, just because I don't think we're going to have a 50 basis point cut. I think we're going to have a 25, 25, 25, a 25, 25, or yeah, that's or like just a 25. We're going to have 1, 2, 3 basis cuts, but I don't think we're going to have anything drastic as a 50 basis point cut, unless the jobs numbers are so astronomical, like so bad, which I just don't see happening right now, right? Let me go over here and type in market calendar. Oh, got a big old piece of dog hair from petting Loki in my mouth. So today we had Fed Governor Christopher Waller speak. We had the minutes of the Federal Reserve's July FOMC meeting, right? That was from last cycle. Atlanta's Fed president speaks tomorrow. Jobless claims tomorrow. That'll be important, I would say. That can be something that leads up to Friday. And then Fed president speaks. Let's see. Yeah, on Friday we have Jackson Hole right there, but everything else next week, it's pretty boring. GDP first revision on next Thursday. PCE next Friday. So that could be pretty interesting, I would say. And then next, the following one, we get CPI. Yeah. So we're in for a wild ride, I would say. We're in for a very wild ride. I still think that the Fed will prioritize the inflation mandate, unfortunately, for the next few weeks, though, until like they're forced to, like, you know, mid-September to be like, hey, you gotta start cutting rates here, even if it's just 25 basis points and you pause for a couple months. You got to get started on this process because the market is starting to freak out here, and when the market freaks out, you know that companies start laying off employees, which becomes a spiraling effect, as you guys might imagine, right? And hey, Villa, happy to see my man. And hey, Justin, never lost more money than when I started listening to this channel. Dude, I'm sorry about that, Justin, man. Cut interest rates by 0.5 percentage point on September 18, 2024, so it almost seems that JP is working against Trump. Well, I would say it is working against Trump right now. So there's two different things here, right? Trump is focused on the job market. You guys didn't see my hands yet. Trump is focused on the job market, and you're seeing Jerome Powell, more focused on the inflation side of the equation, right? Remember, what the Fed has a dual mandate, and that dual mandate is balancing jobs and balancing inflation. Right now, I think you can make the statement that Trump is currently correct about us needing to lower rates. And that's not something that's just like me saying, it's a bunch of the CNBC talking heads and things like that saying it too. But we're just not at a neutral rate. Inflation is not so high that we need to have interest rates this high up, right? I don't think that's the case. And for all the tariffs that Trump is doing right now, it's becoming like trade deals. So like now we're locked into 15% with Europe. So everybody's adjusting to it. But it's not inflation that gets more and more expensive year over year. It's just like a one-time hit, if you will. So what I'm thinking of it right now is Trump is probably correct. He's messaging it in the most horrible way possible with like rants and screaming and hollering and saying, do this, or else, whatever, you're fired, whatever. I do believe we need to be having rate cuts. And I've thought this for a minute here. But again, it wasn't necessarily born out of the data, my thoughts about that, right? Mine was more of what I saw from the data mixed with my own personal life of seeing stores closing, businesses closing, and that not looking particularly good for my local economy over here in Tacoma, right? So that wasn't necessarily very good. But I believe Jerome Powell, like most people that have been in public service, they really care about their legacy, and like they really want to be seen as a good guy in those back rooms where all the wealthy kind of meet and smoke their cigars, if you will. So I'm thinking he will eventually do rate cuts to kind of help us out. But if he tips us at this point, if Jerome Powell tips us into a recession because he was unwilling to cut rates, he will be disgraced for the rest of his life, like the past ones have been that have kind of messed with the economy a little bit too much. And I don't think he's really willing to go there, even if he wants to defy Trump. I think Jerome Powell thinks he's doing a good thing right here. I just don't think he understands the harm it's really doing to the average Americans. And then that's because, you know, Powell, and this isn't a knock against him, he's just not an average American. He's a very, very wealthy individual. Very, very wealthy individual. And they don't usually think in terms like me and you. The middle class and the lower classes are kind of just like something to manage and not really like nurture and take care and help them grow and get better and stronger. That's not really his priority. His priority is more looking at the state as a whole, which is fine, but like, you know, you're gonna see how his decisions kind of vary from mine and whatnot, right? Oh, hey Lisa, thanks. What do you call Justin didn't buy a link in the teens? Oh, what do you call No, don't worry about it, guys. Usually it just depends on how the person's trading and if they want to do, like, my big thing is if you guys are starting to learn trading, what do I always tell you guys? Don't invest money, go do some paper trading, as paper trading is how you can start getting some data. Once you get the data, you can see what you're good at and bad at, and then you can start making some trades, right? That's the best way to do it, so you can see what works for you. My way with momentum, it works, but it's a very iffy thing, right? Like we talked about momentum sliding on the weekly charts here. So we talked about, okay, well, we're still kind of mixed on the weekly charts with momentum. And so when we had these bearish charts on the daily, those are short-term type of holding situations, like you can see right here. Bearish, bearish, bearish. It even started a little bit earlier, but you can see bearish right here is when we had everything kind of screaming bearish, right? You open a short right here, you have 2 days to close that position before we hit our first level of support, right? Things like that. But you have to be very careful about how much you guys are trading and stuff like that. Because before that, there really wasn't too many trades. I mean, you had a trade buy right here, was August 11th. Right there, you had a buying opportunity. But most people probably wouldn't have taken that because we were up against a big level of resistance and we were waiting to see if we were going to break out, right? So it's obviously a little bit different at all-time highs and bottoms and stuff like that. You would have made money, don't get me wrong, but like, would I have made that trade? No. Did I make that trade? No. No, I did not. But again, it could have been some nice money right there. My Charlie Mungie. My Charlie Munger DJCO bet is now up 78K. I think I'm going to sell it at 384 to 462. He was right when he said you don't deserve what you're going to get. Where I've been watching a minute, also with the background noise, lady. Oh, sorry, what do you call? I've been trying to use a new service here for music, and it's just like there's no good music services. I'll pause it for a little bit. I just haven't found any good music services, so I think I'm gonna stop paying for all of them together. They cost a pretty penny every month too. They're just not good songs, and the ones that I like better off of the Pretzel Rocks place, it just the thing is broken so much that I just can't do it. Or YouTube thinks I'm stealing somebody's music, so it just doesn't allow me to make money off the stream. So I'm like, whatever. So we'll see how that works out in the future. Maybe I just need to go with a certain type of tone or something. I don't know. But Erica, I've been here. YouTube doesn't always show my videos, I would say. It tries to, but it just doesn't. So what I'm doing right now is, hold on. So I was trying to get this relit pretty well. What I've been doing is not posting as many videos on this channel for now. I have a video ready for tomorrow, right? And that one is top 5 AI stocks that will skyrocket in 2026. I got a few thumbnails to test out here, basically. View test report. So those are the 3 thumbnails right there. And then this thing goes live August 22nd, so Friday at 6 o'clock in the morning. Right now, members have access to watch it if they want to for free. And then with all the videos I was making, like all this stuff, talking about different things, you know, stocks and Trump gets Wall Street to turn on Trump, all that type of stuff. What I've done instead is I'm going to be moving all of that to my second channel. And what I have is I have my teleprompter now. You guys can't see it, but maybe if I were to put like a blue screen or something up there, I don't want to do that now. But I can now read stuff from there. So instead of having a full-on script that I'm reading piece by piece, what I'm going to do is just have like some notes and stuff and talk about things that I think are going to be very valuable. Like the next video I'm going to be making tomorrow, I'm going to record it tonight, post it tomorrow, this is the opening line hook right here before I get into the notes. The Fed just made a move that could completely wreck the United States economy, and if you think this won't hit you directly, you're dead wrong, right? So I have a lot of stuff set up for it, but it's been interesting. I also took 2 weeks, though, while I was switching on to some ADHD medication, which was a little bit of a challenge for me because my brain has to really reset, if you will. Definitely reset, right? But, God, I knew it was going out. Overall, I'm doing pretty good. I will be more visible on YouTube, I would say. And then once I start putting out the content, I can use Opus Clip to make the shorts. And then using them shorts, I can post the videos on here, TikTok, Twitter, Reels, all that type of stuff, which I think will be pretty good. I'm going to cheat and use a lighter for this. There we go. Yeah, so there's some changes happening, but they're kind of sluggish. And then I'm also building a website to kind of be a tutorial website, which I think would be pretty fun, and it'll kind of like get people to kind of go to my YouTube channel if I'm it. But I'm gonna try to rank it on Google, and I'm using AI for everything, like step-by-step process right here, which is annoying, but I'm getting used to it. I've definitely made a better decisions, more staying disciplined with the plays to lock in more profits. Yeah, it just depends on the own person's trading ability as well, though. Like some people want to trade fast and rough, and that can really burn you if you don't know what you're doing, right? And hell, Jay, how much things are gonna drop? Right now, Bitcoin seems like it wants to head back down here towards 108,000, 109,000 bucks or so by the end of this week. I know we're having a little bit of a bump now, but I don't expect Jerome Powell to be very dovish. Am I opening trades to this effect? No, not really. And that's just because a large part of it is just what does Jerome Powell, what do we think Jerome Powell is going to say? I think he's going to be more bearish. So ultimately, I'm like, okay, I think Bitcoin will go down lower. Therefore, I can buy more. But as far as opening up a day trade or a short-term swing trade, like a shorter one, like 24 to 36 hours type of thing, I'm not risking it just because what if Jerome Powell comes out there and he's very dovish and I was just dead wrong? I don't want to lose money on that trade. If you want to do something like that, just have a stop loss and I think you'd be fine. But you'd want to open the trade sometime, not even now, probably closer to like Thursday night. And then from there, you can see where we move up next. Bitcoin's in kind of this weird opportunity, I would say, right now, where we're kind of at a support level right now where we've been bouncing. But if we're able to hold Thursday, right, and we just kind of go choppy here for a second, Friday, Jerome Powell could launch us all the way back down here to like 111,000 bucks, but it won't be all in one day going 109,000. But if he were to be a little bit more dovish than expectations, and then we're still sitting around 114,000 bucks right now, we will shoot up and see a move up to like 117 to 118,000 dollars within minutes, because we'll be breaking above both these moving averages, which will just make us choppy as hell. But there's an opportunity for a quick buck there. I'd be glued to your computer trading, or at least aware of what's happening with Jerome Powell speaking. We just pulled it up right here, right? And this week overall has been pretty darn boring. Not really much news. We got some jobless claims coming tomorrow, but really boring. 10 a.m., Fed Chair Jerome Powell speaks from Jackson Hole, and these are East Coast time, so that means 7 o'clock for all of us over here on the West Coast. You'd have to be up, and I'm not going to be up, so I'll just wake up and I'll see what's happening to the market at that point. I'm hoping that we're booming because Jerome Powell will be like, hey, yeah, we don't want to do it, but we understand that the job market isn't that much of a danger, so we feel like we have to start cutting right now. And then we'll see how inflation does, and we'll pause in the future if need be, right? That's kind of the appropriate way to kind of like frame the conversation. But he may be very hawkish when he doesn't need to be, and that'll cause a nasty move in the market. So it actually caused something more of a short-term correction, where you see a lot of things pull back around maybe 10 to 15%, and then you have another buying opportunity. It'll happen fast though, and hopefully it won't dip down nearly as much, because everybody keeps on buying the dips because they saw what happened back during the Liberation Day tariffs and how everybody sold out. And if you bought those dips, oh my God, you are just like happy with the profits you've gotten so far. Like even now, from the highs we saw from Bitcoin to where we are now, we're already down 8%. If we come down here, that's around 12, 13% towards the next level of support. That's not terrible. That's a great buying opportunity. You buy more and you go towards the heavens. And while Bitcoin's doing that, you go over here to something like a Pepe or something. And from the Pepe's highs, it's down about 27%. Not terrible, but a good buying opportunity. If you're zooming out a little bit, like, okay, we're still in consolidation. We can have a breakout here sometime in September after, or around the rate hike type things. And we can go sky high, finishing off through October, November, and that'll be it. And after that, we're probably going to have a nasty bleed down. I don't know. I'm still confused personally as far as how long this rally can continue. I am going to start selling off Bitcoin and more altcoins when we start to have those crazy pumps. Because back in the day, I originally thought Bitcoin, the highs for this cycle was going to be like around $120,000. Now, we already went to 125, so I've been dead wrong about that, and we may go to 150 before everything's done. But you know how, like, when I sell Dogecoin, and I sold a lot of stuff last cycle, and I was like, okay, I'm selling it, and I know it's fine. Like I sold my Bitcoin over here. I sold some Bitcoin over here. Sold some Bitcoin over here. It was crashing because I was like, fuck, I'm getting out, right? Now, even if it does go up and all that type of stuff, selling up here or even over here is still better than selling way back over here if you were buying through this, right? So we bought over here, or I bought over here with like around 26 to 22,000 bucks. So my average is like 22,000, right? And selling anywhere up here is still fine because Bitcoin may come back down to like 50,000 by the time all of this is done. You know, we don't know how bad the next crypto winter is going to be, but it's probably not going to be pleasant. And you'll probably also see institutions getting out of it too before everybody piles back in. It'll be like a crazy roller coaster ride. But when that move happens, I have no idea. That's why typically I'm looking for those death crosses and stuff to give me a little bit of an advanced warning saying, oh, okay, I should be, aware of that death cross incoming. There you go. This is Bitcoin's 5-minute chart. Just look how choppy that is. My God, you can see tons of volatility in there. Tons of whales trying to play around, which is probably not going to end that well for the whales, for the shorts at this point. Hey, Erica, thank you. I'm not making another liked songs playlist, man. So I stuck with Spotify. But yeah, they do hike prices on us, don't they? I meant your digs look different. Digs. What are digs? Digs. Oh, you mean the background? Oh, the background is just a green screen. Like last week I had my cleaning lady here and she was cleaning up like the area behind, like in front of my sofa and my TV and like wiping everything down. So I don't know if like, I don't think she wanted to be shown on camera. So I just put the green screen up and then I was good to go. Like, yeah, that's all green screen over there. All green screen. I can't touch it, but it's there. I don't like living in apartments and stuff like that. I used to when I was younger, but having a dog now, it's nice to just let Loki play outside and leave me alone for a little bit. That's actually the reason I left my old apartments back in the day is because I couldn't have a dog in them. Right? You go back to my old videos way back in the day. This one is a Finviz guide back in 2021 is when I made this, or breakout indicators and stuff like that. Doing my first tutorials when I didn't know what I was doing. See, this is my old apartment. It was trash. I had shit everywhere because I had takeout. I think I'd probably taken my mom out to dinner at the time. My TV in the corner. You see, there's a waterfront view, some trees, but not too many trees. Let me show you guys this version. There you go. Right, had like my little wine behind my head right here. Wasn't classy, but it was like some vodka, some wine, some gin, some other stuff, some whiskey maybe, and then had some Clorox wipes over there for wiping everything down because that place got dusty as a motherfucker. It was not a very well put together place, but it was really freaking fun little spot, right? Because I had a waterfront view. You know how many people that I don't know how old I was at this time. This was like 4 years ago, so I was like 25, 26. You know how people at 24, 26, like, want to have a waterfront view? I was very privileged to have that with my corporate life. But yeah, other than this is like a bunch of like tutorials and stuff like that, like really in-depth stuff. But yeah, the intro, this is what my old apartment used to look like. It was great. You can see how thick those walls are. You couldn't hear nothing outside those walls. Only thing you could hear is from the doors themselves, which is fine by me. But yeah, it was nice. There was a dining room right here, and I never even used a dining room, like never. I ate on my sofa, watching that big old flat screen TV that I had in the corner, enjoying the view, making cappuccinos and stuff, and sipping them with the window open. Literally, the first thing I did when I moved here was remove the screens, open the windows, and just like sip some coffee while looking at the view. It was great. It's peaceful times. Back when my hair was very short. That's still kind of similar. Why do I look? I think I'm lighter skinned. This must have been the summer. Yeah, something like that. I don't know. I just didn't have proper lighting back then. I didn't know how to do YouTube and stuff. I think my thing was being lit by my little fan thing up here. Yeah, way back in the day. Way back in the day. Back when I was doing Robinhood affiliate stuff. Way back in the day. How far will the GDP drop? Honestly, I'm not entirely sure because the tariffs keep on coming and going. I don't know if there was as much front loading this time, But now that we know what's happening, I would expect GDP to be pretty darn low this time around because they just don't have to front load it this time. Everything's kind of stabilized a little bit more. And while everything was kind of being worked out, you saw people pull back because everybody pulled forward earlier, right? So because everybody front loaded, they had all that stuff in the warehouses, which means they didn't need to reorder it for a while, which means whatever they're doing now is probably a lot less. So I would say it's going to be pretty bad. And that would also be a great justification for the Fed to freaking start cutting rates, I would say. So there's some ups and downs to it, but I don't expect it to be that high. I mean, here, hold on. 2.8, 2. Okay. We need. There we go. Yeah, by quarter is what I was looking for. So I didn't know how to like actually search that in there. All right, we got the bar charts here. Let's go to the last 5 years. You got some big stuff in 2020, obviously after the crazy times of crashing in 2020. But we go back over here to the last, 3%. It may. Well, let me see. What is it? The consensus is going to be 3%. Oh, that's the forecast from TE. I don't think it's going to be 3% again. I think it's probably going to be 2.6 to 2.4 perhaps. I don't think it's going to be that crazy good of a data set like they're thinking at 3%. And hey, Riz, happy to see you. And hey, GT, I'm familiar with the Beginner Trader channel. He says we don't need a cut based off the data. I'm consistently telling him the data isn't right and we need to cut. Let's see. So, okay, there's different ways of looking at it, and he's not wrong. Just like, everybody's allowed their own opinion. I personally think we need to cut because I'm more concerned with the job side of things. Because if the jobs get out of control, right? If the job market gets out of control, what we see is a bunch of unemployed people, governments that have a lot more crisis because they don't get the tax revenue. There's a crisis across the board, right? And on top of that, the stock market comes down during that type of equation, right? And the Fed is forced to cut, and then we kind of get back on track after about a year or so. His reasoning is more about the inflation and how inflation is not coming down as much as we need it to be for the rate cuts, right? My thing is, even if you are more focused on inflation, the neutral rate where we're supposed to be based off of inflation and the jobs that we're seeing right now, that neutral rate still requires us to cut by like 25 to 50 basis points before we become neutral, which is why I'm like, we're still way, way, way too hot right now as far as the Fed, the hawkish, not hot, hawkish from the Fed. So everybody's going to have their own reasons for it. I just think we need to have a 25 basis point cut because I'm starting to see concerning signs from the job market, and inflation isn't getting out of control. Inflation is going to go up. That is a certainty. It's just not going to be a 2021 inflation boom and 2022 inflation boom. That's not what we're looking at, right? This is all one-time type of pricing. How do I say this? Like the cost of goods is not going up the way people would think it is, right? I wish I could articulate that better. But if like I would actually just go here. Hold on. All right, here you go. So can you break down both sides of the argument for having a rate cut in September and not having one? Be detailed and explain it in a simple way. All right. So arguments for September rate cut, this is more on my side of things, right? So let me zoom in here a little bit so you guys can see what I'm talking about. The case for a rate cut is rooted in the belief that the economy is weakening and needs a boost. That's my perspective from the job side of things, right? A rate cut would make borrowing money cheaper, which encourages businesses and consumers to spend and invest more money. Slowing inflation, that's the first data point. Inflation is the primary concern of the Federal Reserve's, the Fed. If inflation, the primary concern of the Federal Reserve. If inflation continues to fall and approaches the Fed's 2% target, it gives them room to cut rates without worrying about the prices getting out of control. Recent data showing a consistent decline in the Consumer Price Index, CPI, and other inflation metrics strengthens this argument. Potential economic slowdown. While the job market has been strong, there are signs of a potential slowdown. Slowing job growth, cooling consumer spending, or a decline in manufacturing activity could signal that the economy is losing momentum. A rate cut would act as a preventative measure to avoid a recession. Think of it as hitting the brakes on a car before you get too close to the car in front of you, right? And if you hit the car, it's a recession. With this one in particular, the job market is really my focus here. Because again, if we had 70,000 jobs is what they said for July, and we have another revision downward like we had in May and June, which is very close together, right? All 3 months. It's likely they're all fucked up data, right? Sorry for the language, but it's true, right? Then that means we could have had a negative month for jobs in July, which would have been absolutely horrible because we haven't had a negative month for July and I don't know how long. What? Right, look at that drop off, right? We haven't had jobs this bad since October, right? And it got low, right? We fixed it up a little bit, but 19,000, right? So let's go back to the last 3 years. You can see how we're getting close to a tipping point. If you can imagine this getting worse and worse and worse and worse as the years go on, right? So we haven't seen 14,000 jobs in years. Oh, damn, the data's so skewed because of the COVID. Here we go. December 2020, we lost 183,000 jobs. That's the last time we have been that close, right? That's the last time it was that bad. But it's not good. Right, you zoom out a little bit, you could just see it's not good. I wish, oh, hold on, let's just go here. There we go. It's not good, right? Leading into that 2020, there was a bunch of stuff going back and forth, right? But now, you pull up since COVID, we're getting worse and worse and worse. And the more you zoom in, the more you can see that actual decline happening. And this is pretty close to freaking tipping over here. We're not even having random crazy spikes anymore, right? And part of it is two things here. First, the government isn't hiring as many people as it used to. The government is a big job provider. Second, what people don't think about too much, a lot of illegal aliens have been getting kicked out, so they're not getting into the job market. They're not getting into the job market whatsoever. So that's also something to be aware of right now, right? Obviously, kicking people out of the country and like deporting them makes them not want to go to the work where you may find them, especially if they have a warrant or something like that. ICE is coming for you nowadays. If you broke the law, or even if you didn't, you broke the law by crossing the border, you're kind of screwed, right? So, who doing things here? Now, sticking to a plan. Fed officials have hinted at the future rate cuts if the data supports it. Cutting rates in September would show that the Fed is following through on its commitment to respond to economic conditions. This could improve confidence in the Fed's ability to manage the economy. You guys already know I don't have much confidence in Jerome Powell because of what we had with the transitory debacle. And then the global economic conditions. Slow growth in other parts of the world could impact the U.S. economy. Cutting rates could make U.S. goods more competitive globally by weakening the dollar and making it cheaper for foreign buyers. That's also something I'm thinking of. But for me, when I think about that type of stuff, I really just want to see Russia and Ukraine make peace so all that Russian oil can sweep across Europe and lower the prices for everybody. That'd be absolutely fantastic. Will it happen? I don't know, but we'll see. Now, That's kind of like how I feel about it. Plus a couple other things about what I talked about, local areas, seeing businesses closing, and kind of seeing the slowing down of the economy from a first-hand perspective, like many of you can, right? Depending on where you guys live. Like I live in a nice neighborhood. I got a large yard. But if I go into downtown Tacoma, downtown Seattle, you can see a lot of stuff that's like closed down, and it doesn't look pretty because homeless people start moving into stuff, and it just doesn't look safe. You don't want to go out. If you don't want to go out, that hurts the businesses right next to all the homeless people that are still kind of barely surviving. So they're forced to close, and it just becomes a nasty spiral, right? And if the city doesn't have as much tax revenue to pay for a police, so the police presence goes down. It's just a nasty cycle. It requires a lot of investment to fix and get out of it, right? Less stimulus, you may say, right? Excuse me. Talking makes me want to burp, so I apologize for that. All right. Now, here's where the other guy comes in, right? And I think both are reasonable. I just happen to lean on the other side. Nothing against the other YouTuber, right? The case against a rate cut is based on the idea that the economy is still too strong and that cutting rates would be premature, potentially reigniting inflation. I don't see the economy as too strong, so that kind of where this dies off. But I'm still going to talk about this in a way that I can devil's advocate, right? So I want to keep this one alive. I don't want to have to keep relighting this stuff. And this tastes wonderful. All right. Inflation is still a risk. Even with inflation slowing, it's still above the Fed's 2% target. Cutting rates too soon could send the wrong signal to the market and potentially cause inflation to rise again. The Fed wants to be certain that inflation is under control before easing up. This is often referred to as double tapering or waiting for more conclusive data. That's Jerome Powell in a nutshell. Wait for more data, wait for more data, wait for more data. Until it's too late. Strong labor market. The U.S. job market has remained remarkably resilient. The unemployment rate is low and job creation, while slowing, is still positive. A strong jobs market suggests the economy doesn't need a rate cut to stimulate growth. Cutting rates when the job market is strong could cause the economy to overheat, leading to wage price spiral where rising wages lead to higher prices, which in turn lead to demands for higher wages. Think of every few years, your local city or state will say, "Hey, we need to raise the minimum wage by $5." And you're like, "Damn, that's kind of crazy. I don't want that because all of a sudden McDonald's will be too expensive. This will be too expensive. That'll be too expensive, right?" You see the prices go up because of it. So I've never really been in favor of like mandatory wage increases. I've always been to the fact like, hey, in a good economy, you can switch jobs very easily if you got the talent for it, and you can get raises and raises and raises. And that's kind of what happened in 2022 that got things heated up. But again, people had the opportunity and that right, and I encourage them to go seek other jobs when the market demands it. This market does not say to go quit your job. Another reason I don't believe in the strong labor market. Now, risk of assets bubble. Cheaper money can encourage excessive risk taking in financial markets. Cutting rates could lead to inflated prices for stocks, housing, and other assets, creating bubbles that could eventually burst and cause a financial crisis. Lastly, maintaining credibility. The Fed wants to avoid a stop-and-go policy. Cutting rates and then having to raise them again later would damage the Fed's credibility and make it harder for the public and markets to trust its decisions. By waiting for more definitive data, the Fed can show that it's acting prudently and not impulsively. All right? So, you have two sides of the equation. I think this one really is more on what I lean, and I didn't really think about this being like that strong of a case, right? I'm going to hit this button because I've never actually used Gemini research before, so we'll see where that goes. But yeah, that's kind of where I'm at. And if you look at what the Fed said, right? A divided Fed is worried about tariffs, inflation, and labor market data minutes show. This is before they had all that information, though. So this is the minutes from July, which everybody was like, oh my God, what the heck's happening here? Because he was very hawkish. This is before they had all the other data, so it's not really as useful now. But it is interesting to see before the data started coming in, they were still prioritizing inflation. So that's still where they're leaning, of course, because they did not have a cut in July. Hopefully that helped you. I think I like to be able to use AI in that situation. Keeping it real, I would love a waterfront view. Yeah, waterfront views are great. That waterfront view cost me only like $1,500 a month. 15.25 or something like that. Wasn't bad. I mean, now back pre-inflation prices, I guess it was pretty high, but it wasn't terrifying. The hard part was they wanted you to have 4 times the income in order to move in, so I needed to show I was making like $6,000 a month, and I was like, dear Lord, I had to pull out my pay stubs and stuff, which I hate. But it was let me see if I can go over here. Incognito window, maps. Hold on. I used to live, so this is Tacoma. I used to live downtown Seattle, but after I got tired of that, because that was expensive, I moved down here to Tacoma, which is about like a half an hour away, basically. It's like a whole different city. And I used to live right here in the Stadium District by the Castle School. So my place was in this corner right here. And then I have a view of all that water that was there, the whole bay, which is really freaking nice, depending on where you're at. The only thing is I don't really have many photos from there. All of it's from old videos. Look at the old road right here. I mean, like you drive up the road, old buildings, right? I used to live in this building right there. Old buildings. But you see it has a light rail next to it, so if you wanted to go somewhere, you could do that. Literally a big old school here, so there was always safety and cops around, so it was a really safe neighborhood. And then, of course, I don't know if it'll let me go down this path here. Can I go down that way? There's a condo building right here where every floor is a condo, but I don't think it'll let me. Hold on. Does it? Well, the grass area, right? And the summer, it had freaking nice little environment. But this is so old. This is such an old thing. This is all a parking lot now. Everybody used to have their own gardening plot, so you could make tomatoes or mint or whatever. I just said herbs because it was easy to maintain herbs. And then you had a view of the water. I don't think you can see my car though. Was that? No, that was my car. Well, yeah, my friend used to live right here too. A friend from middle school, and I was up here, but on the other side of the building. So that was nice. Not many places have a whole little area for you just to chill and, relax, right? And I think there was some studios in the bottom too, which were cheap. I think they were like $600 a month or something like that, but they were really small studios. But hey, if you want to have a nice little environment, you want to be moving around the town, pretty nice idea right there. Back in 2021, when you used to go on that site with all the thumbnails and charts, you just flew through them like a boss. What do you call? I know I need to start doing some more options and stocks and stuff like that. But that's what the second channel is for. I'm going to just be going over a bunch of stuff and just kind of seeing what sticks. Then once I get a feel of what's working, I'll do that. The thing is, like 2021 was such a weird time because everybody was like trapped inside because of the mandatory mandates. So everybody was like watching YouTube. So there was a huge flow of them. You look at a lot of the channels nowadays that were really popular, a lot of them haven't been able to survive because they weren't investors. They were just yappers, right? Like, again, I've showed you guys my channel makes like no money. And I like this because I can make money in other ways, like a sponsorship here or there, but it's not like a livable income. Last 28 days, I've made $253, right? Now that's because I just got remonetized and stuff like that, but still it's not a lot of money, right? Lifetime for like since 2021 or something like that. Since 2019, I've made $85,000 off the channel. But again, that's not really a lot of money. 2021 is where I had this big spike in views and everything, and that was some money, but very, very different, right? Not enough to keep you going, if you will, right? Let me see. There was a lot of wild Doge live price chat. Oh, I bet. There was huge fights back in the day, too. It was fucking horrible trying to monitor that. There was a bunch of people from Korea typing in Korean. There was a bunch of people from the Middle East typing in Arab. And oh God, people were just getting pissed off. Like, speak English or speak Korean. I was like, God, I don't give a fuck what you guys are doing. Just be nice. Be nice. I don't want the moderators to go crazy. And then one of my moderators back in the day, he was like really sold on Safe Moon. I forgot who he was, but he was like dead set, like, buy Safe Moon, Michael, buy Safe Moon. I was like, my friends told me not to invest in it, so I'm just going to listen to them. And then boom, Safe Moon was a scam. And I was like, shit, that's why I like to have friends in my pocket, not pocket, but like friends in my vicinity, right? My group, where they can like look into the blockchain. They're like, this isn't really worth your time, or this is probably okay, yada, 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 right? Scary, scary stuff. And hey, Lux Guy, happy to see you. What a beautiful day to stack some sats, bro. Long live the Bitcoin. Wait, Bitcoin Holio? Oh, Bitfolio, basically. I see what you're saying. Okay. Yeah, I mean, pretty much that's what I've been doing. Yeah, last night I had to buy some crypto. I was gonna buy some more, but we kind of spiked today, so I was like, I'll let it wait a little bit more. I bought some more, and hey, Ken, happy to see, man. I bought some more. I bought like $400 worth of WTX yesterday. WXT, weeks token. That's still the one I'm placing a lot of hopes on. This is the exchange token for the exchange that sponsors me weeks, so they're not paying me to say any of this, but just like I did with BGB back in the day, BitGet token. I'm hoping, this is the weekly chart, I'm hoping this can go sky high just like BitGet did, because that was a really solid earner, and it was an earner during a bear market, which was absolutely insane, but they really saw some big growth here. The market cap for this sucker is still around like $100 million, so I don't really feel like I need to do too much, but I've tossed in over $1,000 at this point, and I'm hoping it continues to go higher. I first bought way back over here, sold over here, actually I sold over here as it was dropping, and then it came down even more. I bought some over here, and I bought some more today, and I sold some, I guess, a few weeks ago, so I'm kind of like playing around with it a little bit right now, but it just hit all-time highs last week, so I'm hoping it'll continue to grow up. I'm hoping, I don't know. I want to buy a little bit more of it, but like I said, I still think Bitcoin has a little bit more room on the downward side, so I think this has a little bit more room on the downward side. So it'll be a wait and see type of approach for some of those moves. You're bullish on Link and ZBC, and I'm on the fence about XRP. I think XRP is fine, but I'd rather day trade it or swing trade it. Yeah, it's just a little bit iffy these days because it just has those rapid moves. And hey, Men's happy to see my man. Hope you're doing well. And hey, Josh, happy to see both of you guys as well. Let me see. It's a pretty chill day. There wasn't much news. Things are working out pretty well in our favor. We have an idea of what's happening over the next few days, and we know there's going to be a good chance of a rate cut happening in September. So the markets are kind of just waiting. What sucks is now the markets are just kind of in this holding pattern, though, until we start to see some information from Jerome Powell. Well, let me see what GT was saying. Beginner trader channel. I don't know him. Let me just Google him. There we go.
Now, this is...
Oh, he's probably a streamer like me. I don't see many regular videos. 5 hours ago. Yeah, there he goes. Beginner trading. Oh, the FOMC minute support. Yeah, the Fed is definitely more, what do you call? Damn, streaming for like 2.5 hours. That's wild. I mean, that probably does work for him though. Yeah, I don't know. I'm still on the side we need to cut. Actually, here, hold on. Oh, this is the analysis. Here's the plan I put together. Let me know if you need to change it before I start research. Oh, I didn't even do the research. Okay, we'll open up a GPT account at the same time. I'll hit start research on this one. And I'll just have GPT up very fast and I'll say, hey, what is the new... Hold on. What's the neutral rate everyone is talking about when it comes to the Fed? Are rates too high right now according to the data, or should they be lower? Now, GPT doesn't like politics or like going against norms and institutions for whatever reason, so it's probably going to say something kind of funky here, like say it down the middle, like, oh, it could be this, could be that, and that's fine. But what is the neutral rate everyone is talking about when it comes to the Fed? Are rates too high right now according to the data, or should they lower? Explain in simple terms. Let's see this one here. And I can zoom in a little bit more here for us as well. Right? The neutral rate, often called the R star, is a real inflation-adjusted interest rate at which the economy runs at full strength, stable inflation, and steady growth without being either stimulated or squeezed. It is not a fixed number. It's an estimate using economic models like those by the Holston, Lebach, Williams. So different experts have slightly different estimates. So As of early 2021, the model estimates a real neutral rate of around 0.6 to 0.8 real rate. A 2025 analyst suggests that with inflation included, that translates to a nominal neutral rate, interest rate without adjusted inflation, of around 3.6%, which is roughly 0.7 percentage points lower than current rates, right? That's 2 basis points. That's 2 cuts. That's why I said cut 1, cut 2. I even think we can have a third cut, but we'll see, right? Looking at nominal rates, they view neutral range at 3 to 3.5. Some estimates argue that the neutral rate has gone up in the post-pandemic, even nearer to 4%, though it's not universally accepted. So rates higher right now, right? As of July 2025, the Fed's target rate is 4.25 to 4.5. We want it to be at around 3.6 to 3.5 to 4, right? So that's a little bit less. Let's see. Policymakers generally see current rates as modestly restrictive, meaning they are slightly above neutral, designed to temper inflation, but not excessively tight, right? That right there kind of sums up where the Fed is at right now. And yeah, that's basically it. There's a bunch of other stuff here. We don't need to go over that. But you can see where we're slightly just a little too much. All right, let's go over here. Oh, I just got the message just now from on my phone saying your report is ready. Oh, let's see. So, executive summary: the Federal Reserve September dilemma. Oh, we can just read it like this. I think that'll still work. I mean, I'm blocking it though. Oh, here, hold on. Voila. So the Federal Open Market Committee meeting in September is positioned to be one of the most consequential and contentious in recent memory, defined by a fundamental conflict over the correct path for monetary policy. The debate is not merely a technical disagreement, but a deep philosophical divide, evidenced by a rare and historic public dissent by 2 Fed governors at the previous meeting. At its core, the central bank faces a dilemma. Should it enact a preemptive interest rate cut to counteract clear signs of an economic slowdown, or should it hold steady to protect its hard-won credibility and prevent a potential resurgence of inflation? I don't think they have hard-won credibility. That's why I disagree, but we'll see. The decision will require a delicate and nuanced interpretation of a series of contradictory economic signals. Ain't that the truth, right? Right, and then basically, I'm not going to read all this. This is a lot of stuff, but you can use GPT to do all of this yourself, or Gemini in this case, to do it all yourself. Look at all that data. Look at all the places that looked for all this data, right? Morningstar, Investopedia, Reddit, Politico, whatever. So the probability of a 25 basis point cuts around 94% in this thing, but we just checked it out. I think it's like 85 right now, but 10 points ain't going to kill anybody, especially when it's still so high, like in the 80s. But you can do all this, which is pretty darn awesome. This is why I love AI right now. Just ask it a question. And that question, remember, the question I asked wasn't crazy. I asked, can you break down both sides of the argument for having a rate cut in September and not having one be detailed and explained in a simple way? We made a plan for it, and boom, it spat out all this. Pretty darn good, right? Sources read but not used in the report. It has all this type of stuff, right? jpmorgan.com, federalreserve.gov, thoughts, and then it shows how did the research, right? So it's pretty darn cool. I wish more people would use it. It's not really to like make you a better trader. It's just kind of help you understand the market more, which will then help you become a better trader, right? And hey, Digital, okay, happy to see you, my man. I only see you smoking during good times. What do you call? I smoked yesterday and we were down. I smoked today and we were up. Honestly, so my car, so Monday night I came back from Seattle. I went up there for a barbecue with some friends, smoked some cigars. I got back to my house and I think I forgot to turn off the headlight, or maybe when the light's inside the car. So I went to I went to drive to the cigar lounge last night and I tried to use my car thing to unlock the car. Completely dead. So I couldn't even open the car doors without actually manually turning the car key, which is like old fashioned, right? So my car is dead right now. I have a package being delivered here in the next few hours. Oh, it's delivered. It was delivered 7 minutes ago, which will be fine. So yeah, I'll be doing that here pretty soon. Actually, I'm gonna do that in a few seconds now because I got a friend coming over to help me. He's gonna like watch it while I turn the key. I don't like to just leave it on and just turn the key because I don't know if it's actually a button to say hit. But we'll see how that goes. But yeah, so that's some of the stuff I got going on here. And hey, bullshit, happy to see you, my man. Hey, LW, happy to see you as well. What do you call? I'm gonna hop off now. I have a call I have to do in like a few minutes because I'm setting up that new website I was talking about. I expect Bitcoin to still go lower here over the next few days unless there's something different that happened with Jerome Powell's speech. I'll be live tomorrow, which is Thursday, and I'll go live for like 2 to 3 hours tomorrow so we can talk a little bit more. I'll have my cigars with me. Hopefully, no, I won't. I won't have my cigars until after the stream. Well, I have cigars upstairs, so I will get a cigar there, up there, and I'll smoke it. I think I actually have. I got a nice cigar in my car. Maybe I'll smoke that. No, I'm saving that one for when. I got a $150 cigar in my trunk right now in the humidor in there, for when Bitcoin hits 150,000. So I probably should save it, right? It's from the year 2015. No, 2010. It's a 15-year-old cigar. It's aged beautifully. So we'll see how that works out. But yeah, so I will see you guys a little bit later. Sorry for the early departure. So I got to go get my car. That's the thing that sucks. I got a friend coming over in like 3 minutes. But tomorrow we'll do a longer stream. I may even just go live at noon and we'll just kind of wing it for a few hours and just kind of see how it goes. When you guys are in here like commenting and talking, we can go back and forth all freaking day long, and that's the type of stuff that I really enjoy because you guys can see I'm much more talkative. I'm like, okay, let's end the stream early because nobody has questions.